You're not taking risk anymore. That's why banks are not involved in risk taking.
Yes.
They don't really care about due diligence.
By their very nature, because banks don't take risk.
Yeah.
There's no profit sharing element anywhere at all.
Correct.
So you can understand the argument when someone says, well, how can Islamic banking be Islamic?
Yeah.
When they are not taking any risk
Yes.
in any type of financing that
You'll
you're doing.
notice something. Islamic banks don't finance SMEs, small and medium enterprises. They don't finance small businesses. Why not? They don't like measuring risk.
Yes.
All they want to do is, here's 100, give me 100 back plus 5% interest or 10% interest. They don't care what happens in between. Your business failed, I don't care, I'll repossess your house.
Yes.
I want to get my capital back. But that's not how Islamic finance should work.
Yes.
It should be risk sharing. It should participate in the real economy. Hence why the financial instrument I created, a PPN, is a type of sukuk or Islamic bond, except it's really risk sharing.
Yes.
What happened with the sukuk that we created with Deutsche Bank 20 years ago, they became more and more bond-like. And they ended up having a contract attached to them that said, we, the company who's borrowed money from investors, promise to pay you back what you gave to us. That's a guaranteed loan. How is it different from a bond now? So what I wanted to do was to go back to the roots of the Islamic economic model of prophetic trade and create a sophisticated, modern, international capital markets instrument listed on a stock exchange somewhere that replicated that pure form of trade. And it's risk sharing. The difference is, of course, I now have to do an excessive amount of due diligence on this company. In fact, my CFO has to embed himself in that company for several months beforehand to make sure we are carefully structuring from start to finish the flow of cash through this business, so we can monitor it and have KPIs and measure it and bring it back to the investor.
To minimize the risk.
To minimize the risk.
So it's not guaranteed risk-free, but you're doing what you can to minimize the risk.
Yes. And that's the basis of a very healthy economy. Because once you start aligning investors with businesses, you have a much more vibrant economy.
Yes.
Right? Whereas when you have an economy in which one party is the master, being banks, and the rest of us are all slaves, servicing the debt to our master, that's not a very healthy, that's an asymmetric relationship. And you have an economy which is dominated by financial services, what we call financialization.
Yes.
That's not healthy at all. It's created all the inequality that we see in the world today.